Hey, it's Monday with Paul Olbrantz. It's Paul Olbrantz with this Monday market update. How you doing? Hope you had a great weekend. Hey, this intent of this video is for you out there that are looking to buy, sell, or refinance. Interest rate is a key factor, and with the volatility that's going on with interest rates, I hope you're paying attention to these videos because the more you know, the better informed you can be, less surprises, etc. This week we have a basis. We are walking into this week with a locking bias, which means there's more pressure on rates to go up than it is to stay stagnant or actually go down. And for some of you out there that want to look at the charts towards the end of this video, I'm going to pull up the bond chart and I'm going to share exactly why the locking bias is in place and how much impact it could actually have to interest rates. It's super important. So you can take my word for it or stick to the end and let me share with you what it looks like. As far as what happened and what we're looking for this week, we last week rates were doing very well until the jobs report came out on Friday, much stronger than expected, and we saw an increase in interest rate pretty substantially on Friday. It took a big chunk of a lot of the gains that we've received over the past week or two, and just like that, it was gone. Now, the funny thing is, or the realistic thing is that, the job market or the jobs report has continually been updated. So there's no reason to believe that this one won't be updated, but this is the number that we're dealing with and interest rates rose. Now, what does the job market have to do with interest rates? If you're asking that question, it's a great question because it doesn't seem like they interact with each other, but they do. Remember, 30-year fixed rates are traded on the bond market. The bond market is very inflation sensitive. So it's a kryptonite. Inflation is the kryptonite to 30-year fixed rates. A strong job market implies that employers have to pay their employees more, which, by the way, is an amazingly great thing. However, that cost of paying people more is going to be passed on to you, the consumer, through their goods and services, and that is a form of inflation. There it is, inflation, the kryptonite to 30-year fixed rates. So that put the upward pressure on bond prices. On interest rates. So as we head into this week, we have two reports that are coming out that are really going to impact interest rates. And I think it's going to be very hard to gain positive ground on these reports simply because how it's calculated, because it's a 12-month look back, and B, with the tariff starting to take into effect, the market needs to absorb those increased costs. So this week we have CPI, which is Consumer Price Index. That's a measurement of inflation. We also have PPI, which is essentially it's a measurement of inflation, but for businesses. We don't expect those numbers to come in strong. That's why we're in favorable, I should say. So that's why we're entering this week with a locking bias. All right, there you have it. For you that stuck around and want to take a look at the charts, let me bring it up here real quick. Let's see. There it is. So what you're looking at here is a 30-year bond chart. And right here, these are levels of resistance. So currently we're trading in between 100.82 and about 100.42. So that difference is about a 40 basis difference, which if I had to guess, it's about an eighth to a quarter% in interest rate. I want you to notice here's Friday's job report. So this is an indirect relationship. As the bond price goes down, as it shows in red, that means rates are going up. So you can see Friday had a huge impactful day for us. Today we came in, we broke over this level of resistance, but now we're trading right at it. So if any of this news comes out, the CPI or the PPI that comes out not favorable or not even, just not favorable, bond prices have a long way to test that floor resistance level, which can mean, a pretty good interest rate increase. And so I probably wouldn't play the floating game this week. But if you do, all right, that's good. If you're a betting person, there you go. All right, now you know. Hey, if we're not working together, we should. There's a QR code right there. Go ahead and click that. It links to my calendar. I would love to meet with you, talk strategy. Even if you aren't ready to take an application, don't worry, we got you covered. I've been doing this for a long time, and I promise you I can help you save money. All right, Paul Olbrantz, Clear to Close Broker.